Welcome and thank you for finding me on YouTube or the internet about how to purchase a home in the state of California, Arizona, Utah, Nevada. This state offers a 100% no money down purchase program known as the USDA. It's a great program. Not a lot of people know about it because it's not a marketed program like an FHA, VA, or conventional type program. But if you're looking for a property in a rural designated area, and I'm not talking like this is rural, like somewhere in Kentucky or Iowa, we have rural designated areas in this state that you can purchase a property for. Now, you have to go and buy a property in that particular approved lending area. If it's not in the USDA approved lending area, then you can't utilize this program. So it has to be in a USDA-RD approved lending area. And I'll have a link below on a video that will have those approved lending areas that you can search. So it's how to get to the site, plug in an address, and find out where the approved areas is in the state that you're looking to purchase in. Now, when you find that approved areas, you got to credit qualify, income qualify as well, just like any other program. The USDA just offers a 100% no money down home loan program. Right now, there is income limits, so you have to purchase in a particular area, and there's income limits. And right now, they just changed, and they're pretty healthy based on the family of four. Right now, in the state of California, these go by the county. So not every county has the same income limits, but right now, in the state of California, Riverside, San Bernardino County, up to 4 individuals, you can make up to $111,000, and that's up to 4 individuals living in the household. If you have more than 4 individuals living in the household, you can make up to $146,500. That's pretty healthy in a particular area that you're looking to purchase in. So if you make over that, like say you make $200,000 a year and you're looking up in the mountain communities of California, like Big Bear City, you're not going to qualify because you're making too much money for this particular program. But the average income for a household, a family of 2, is like $72,000. So right now, if you're a family of 2 or up to 4 and you have children go in school, you can make up to $111,000 in San Bernardino County of California. Arizona, Maricopa County, it's $110,650 up to a family of 4. So if you're looking outside, like let's say in Wickenburg or Whitman, and you're making less than $110,000 with a family of 4, this program can benefit you on purchasing a property. So we need to look at this one. Credit score. There's no credit score required by USDA, but the lenders have what's called an overlay. If lenders do USDA at all, a lot of them don't, but if they do, they may have an overlay when it comes to credit score. They may have a 640, a 660, a 680. The company I'm currently with right now, Canopy, we go down to a 620, and I think that's the lowest I have seen somebody go down to. Somebody may, you got to search out that company, they may go down to a 580. I just don't know who those are. Some companies don't offer USDA at all, and if they do, I've seen them with higher credit score limits, and that's based on the lender. They're going to put what's called an overlay. So your credit, you need specific things on the credit. Just because you have a lendable credit score of a 620 or above still does not mean you qualify. What's in the body of that credit report may hamper your ability to purchase a property. So you must have 2 things when it comes to credit: a credit score and lendable credit. What's on your credit report? If you have a bankruptcy, a foreclosure, or short sale, collection, judgment, that may affect your ability to purchase a piece of property utilizing the USDA Home Loan. That's where we need to look at it. If you're looking to purchase in these particular approved areas, let's look at your income. Let's look at your credit. And if there's something that we need to look on the credit to address, to clean it up, take care of collections, take care of judgments, see if you did have a bankruptcy, whether it be a Chapter 7 or a Chapter 13. They have different requirements for that. But the credit's a 620 with the company I'm currently working at. Like I said, I've seen other companies at a 640, 680, or they don't do the USDA at all or even offer it. Because like I said before, this is not a well-known program by a lot of people. A lot of people don't know that the USDA-RD, Rural Development, offers a home loan program. Realtors may not know this because they're not in a rural development area that they are not versed into this type of program. If you're an LA realtor, why would you know about a USDA program? You're going to know more about the conventional or jumbo type program because of what's going on with the housing market in a particular area. They may not support somebody that makes $110,000 a year. You need to make $500,000 a year to purchase in LA. So USDA is a great program. So income, $111,000 for San Bernardino County, and each county is going to have their different income caps, 1 to 4 people and then 5 people and above. So, and that's everybody that lives in a household. So if you got a relative that's going to move in with you, that individual can be counted as a dependent or somebody living in the house. No, not a dependent, but who's going to live in a household. Because you got to fill a form out on the USDA form. Who's going to live in the household, their names. So when we submit it for approval, they're going to know how many people are going to be in the household. So 1 to 4 or 5 plus has a different income bracket. So an approved lending area, I'm going to have a link below that you can go to the USDA site, plug in the address, see if it's approved or not, and a link below also on how to find those particular areas as well. It goes into detail on when it's approved and when it's not approved. Okay, so we got a income limit, we got a debt, the credit requirement, which is the credit score and what's in the body of the credit. I don't self-underwrite yourself. Don't say, well, I make too much money. Don't say, well, I don't have the credit for it. You need to speak with somebody like myself, and we need to look at your credit, your income, and your assets to say, yes, you are pre-qualified to purchase on a USDA home program. But like I said, assets. You don't need any money for the down payment. It's a 100% no money down. Now, you do need some money to open up escrow, and that's where you need to talk to your realtor about on what you're going to put down as what's called an EMD, an earnest money deposit. If you put $1,000 down to open up escrow, that $1,000 will go towards closing costs. The good thing about the USDA, the seller can pay up to 6% of your closing costs, whatever the purchase amount is. So if you're purchasing a property for $300,000, 6% is $18,000. We're not going to need $18,000 to close a USDA loan. But what we can use that money for, if the seller agrees to pay for your closing costs up to 6%, is we can pay for all the closing costs. We can pay for the interest rate buy down. So this will be a benefit to you if the seller is willing to pay for your closing costs. So no money for the down payment. Seller pays for your closing costs. Great. Talk to your realtor on how to present the offer to the seller. Also, if the appraised value, let's say you're buying it for $300,000, the value comes in at $310,000 or more, we can take that freed up equity of the $10,000 and finance your closing cost. That's right, finance it. So you don't have to bring in any closing costs, but the appraised value must come in higher than the agreed upon purchase price. If you purchase it for $300,000, the appraisal comes in at $300,000. There's no equity in the property to finance that closing cost, and this is the only purchase program that will allow you to do that. All the other ones, you got to come in with your closing costs, or the seller pays for it. But if the appraisal comes in higher, you cannot finance that, only on the USDA Home Loan program. So think about it. You put $1,000 for the earnest money. That's going to go into escrow, called an EMD. There's no money for the down payment, and the seller agrees to pay for your closing cost. That $1,000 that you put in to open up escrow with, you're going to get that money back as long as we do not need it for anything. You can utilize it to buy the interest rate down if you want to do that, or buy the loan amount down. So if you start at $300,000, you put $1,000 in, we can start at $299. But get your money back. So no money for the down payment, and the seller pays for your closing costs. You're buying a piece of property in the state, California, Arizona, Nevada, or Utah, for about $1,000. Now that comes from not the $1,000 you put in, but you got to pay for the appraisal. And it's going to range anywhere between $400 to $900, depending on the location of the property and the availabilities of an appraiser. So about $575, $600 is about standard. But if it's in area that limited appraisal, it might go up a little bit more. And the home inspection. Home inspection is going to range anywhere between $300 to $600, depending on how big the house is and the location of the house. So you essentially If you get an appraisal for $600, $500, you get a home inspection for $400 to $500, that's about $1,000, ranging. It can be less, it can be a little bit more, depending on the location of the home and the availability of appraisers and home inspectors. But that's it. You can buy a house for about $800 to $1,200, depending on the availability of those third-party vendors. No money down. Seller pays for your closing costs, or the appraised value comes in higher than what the agreed-upon purchase price is. Now, if the seller doesn't pay for your closing costs and the appraisal doesn't come in higher than what the agreed-upon purchase price is, you're going to have to come in with your closing costs, and range anywhere between 2 to 3% of the purchase amount of what your closing costs going to be. And you can get the closing cost money, checking, savings, stocks, bonds, IRAs, mutual funds, a gift from a family member. You can sell something of value, like if you have a car and you got the pink on it, you can sell it, paper trail that bill of sale with the pink slip, and we can verify that you sold a automobile for your closing costs. But this is a great program to purchase a piece of property that's in an approved area. You make the income limits, you have the credit score, and you have the income that's verifiable income. This is not a bank statement program. This needs to be a W-2, pay stubs, Schedule C for sole proprietors, Schedule E for business owners. You can purchase a property as long as you qualify for it, of course. And the last bit is debt-to-income ratio. The debt-to-income ratio on a USDA is tighter than it would be on VA and on conventional as well as FHA. So the qualifying debt-to-income ratio right now as it stands is 29%. That's the front end. So if you make $1,000 a month, only $290 of that, which is 29%, can go towards a home payments, taxes, insurance, principal and interest payment, mortgage insurance, flood insurance if you're in a flood zone, an HOA. Now $1,000, and you're talking more. I'm just liking to round. So 29% front end. Front end is the housing payment. The back end is 41% max. That's the housing payment plus all your other debt that's going to appear in your credit report or it's coming out of your pay stub. This is not your utilities. This is not your trash, your water, your cell phone bill, your medical bill. This is your credit card, anything that you have to pay back that you went to court for, child support, alimony, anything that's getting deducted from your pay stub that is court ordered. So your tax is not getting out of that, like your state or your income. We take your gross amount and we times that by 41%, then we take out the mortgage payment, and that's what's left that you can have for auto loans, student loans, credit cards, child support payment, anything that appears on your credit report. Now, you can push the envelope as long as you have a 680 credit score or above. Now, this is through USDA, not through any other lender. This is USDA requirement. You can go to 32 front end, and you can go to 44 back end. So there's a little bit of wiggle room as long as you meet that requirement of a 680, been on your job for 2 years, 3 months of PITI payments. So if you have 3 months of the PITI payment, you can push that envelope. So this really can work for you. And you can use the 401k, you can use stocks, bonds, IRAs, mutual funds, checking, savings as the reserve requirements as well. So that's why I want to talk to you. You're willing and able to purchase a property. You're limited on funds. And the biggest, obviously, is you got to buy in a particular area. So if you're looking I'm in Arizona. If you're looking in Arizona and you're looking in Phoenix or like the surrounding like 10 miles, 20 miles outside of Phoenix, it's not going to work. You're going to have to go further outside of Phoenix, like Whitman, Wickenburg, Gila Bend, in between Tucson and Phoenix. There's some areas, or south of Tucson. In California, going outside of LA, way outside of LA, the mountain communities, the high desert, those things are approved. Way out in Indio, Lucerne Valley, those areas are approved. Adelanto, Pinion Hills, Phelan, those are all approved. Hellendale, if you're looking up in that particular area. North up at Little Rock, Lake Los Angeles. So there's are areas, but you have to move out in those particular areas. Utah, there's a lot of approved cities in Utah, west of Salt Lake and south of Salt Lake, going down to St. George that are approved. So if you're looking south of Salt Lake City, perfect. Nevada is a little bit, you guys got a lot of deserts. North of of Las Vegas, way up north. You're going to have to purchase in that particular area. So look at the link below. Watch the video. Give me a thumbs up. Give me a like if you like this video as well as the other one. I'm going to have a link below on. This program's not for everybody. If you make too much money, if your debt ratio is a little high, and you're not looking in a particular area, that we do have other programs like an FHA program, 3.5% down, or a conventional program at 3% down, and a VA. If you're a veteran, an active or retired military, and you've been discharged or you're active, you can do a VA as long as you have your benefits available to purchase a property at 100%, no money down on a VA. But those are your core 4 types of loans. Well, then you have the non-QM stuff for the jumbo product. The USDA is an untapped product where a lot of people do not know about them. I'm hoping this will give you some insight, this video, of what the USDA is about. It's a great program. We don't do enough of them, at least in the areas that I'm in, because a lot of people don't know about them. And that's why I'm doing these videos, to push it out so you know about a USDA program. A lot of these areas people are moving to because they're working remote. So they might move to a particular area way outside the suburbs, way to the burbs. That's an approved lending area. But check the link below, look at the video, find those areas that you would like to purchase in. Let's connect. Let's talk about your income. If you make right now, they will change. They just changed. This changed as of July 13th. So for about a year, they come out. I've seen them in May, June, and July. They'll update their income. Sometimes they don't do it, but they just change it on July 13th of 2023. And next year, they'll end up probably changing it as well. And I get the email and I print these out so I know where the income limit is in a particular county. So if you're looking and you make under that required income, the link below to the USDA site, you can check out the income limits. If you're watching this video 2 years after I do it, they'll have probably changed. They're probably going to go up, but they also can go down. But all I've seen when I started doing USDA, they're around $74,000, $75,000 on the particular area that I was concentrating on. So they have gone up a lot since then, and I anticipate them going up, but they always can change. The debt to income ratio, that's kind of been there for a while, but that can change as well. But I stay on top of what's going on with the USDA. They got a great site with an FAQ, frequently asked questions, that you can look at. I'll have that link below as well. But if you have any questions on the USDA Home Loan Program in the state of Arizona, in the state of California, in the state of Nevada, or in Utah, those are my 4 licensed states that I can do business in. I'd love to connect with you and have a conversation. If you're willing and able buyer looking to purchase a property in a particular area, let's explore the USDA, because you can purchase a property, your first one, second one, or third one. You can't own any at the time that you're buying USDA. But if you sold a property and you want to move into a rural area, then this, or an approved area, and that's not even a rule, just an approved area, then the USDA might be the loan for you to check out. You can buy this property. There's no prepay penalty. Pay it off anytime you want. There's no adjustables. They got a 30-year fixed rate mortgage. That's it, basically. Cut and dry. No prepay, no adjustable. Pay it off at any time. The payment, the principal and interest payment is not going to go up because it's going to be a fixed interest rate with a fixed principal and interest payment. But do call me. All my contact information is below. My name is Nathan Ruffey with Canopy Mortgage at 909-503-5600. Call, text, email me. Like I said, all my contact information is below. If this video was helpful, give me a thumbs up. Give me a like, give me a comment, share it to somebody if you that you know that's looking to purchase a home with some limited funds and willing to move outside of their comfort zone. A lot of people move within 12 miles of where they statistically move within 12 miles of where they're living at right now, because that's where they establish family, friends, their eateries, their jobs, their doctors, haircut, their shopping, their eating, all within about a 12-mile radius. But if you can move outside of that 12-mile radius and you're looking at an approved area in the 4 states I'm lending in, let's talk. A lot of people working remote, it might be a little bit more affordable to move outside to these areas that you're looking at. But give me a call, give me a thumbs up. I look forward to connecting with you. Thank you.